This shared conversation is generated by AI, for reference only. Detail a sample small business accounting and tax write-off or business expense write-off in PNG. Excellent. This is a critical topic for small business success in Papua New Guinea PNG. Let's detail a realistic scenario, following PNG-specific tax laws and business environment. Important context. PNG's regulatory framework. Governing body. The Internal Revenue Commission IRC of PNG. Key legislation. Income Tax Act 1959 as amended and Goods and Services Tax GST Act 2003. Core principle. To be deductible, an expense must be incurred wholly and exclusively in the production of assessable income. Private or capital expenses are generally not deductible. GST. Businesses registered for GST required if turnover greater than K500,000 annually can claim input tax credits ITC for GST paid on eligible business expenses, separate from income tax deductions. Sample small business scenario. Business. Kumu Market supplies a registered business name. Structure. Sole trader proprietorship. Activity. Buys fresh produce from Highlands farmers and sells it at Port Moresby's Gordon's Market. Tax year. The 1st of January 2024. The 31st of December 2024. GST. Registered for GST as turnover is projected to exceed K500,000. Detailed example of a valid business expense and write-off. Expense category. Motor vehicle expenses operational use. Scenario. The owner, David, uses his dual cab ute purchased and registered in the business's name primarily to transport vegetables from the airport to the market stall. He also uses it occasionally for personal family trips. 1. Eligible deductible expense writing it off. What was purchased? Diesel fuel for the month of October 2024. Total invoice amount. K800 including K80 GST at 10%. Business use percentage. David maintains a logbook for 12 weeks, showing 85% of kilometers driven were for business collecting delivering stock, buying supplies. 15% was personal. Income tax deduction calculation. Fuel expense excluding GST. K720 K800 K80. Business portion. K720 85% equals K612. The K612 is a deductible business expense. It reduces the business's net profit, and therefore its taxable income. GST input tax credit ITC calculation. Total GST on fuel. K80. Business portion GST. K80 85% equals K68. David can claim this K68 as an ITC on his next GST return form 3B. This reduces the amount of GST he must pay to the IRC. 2. Non-deductible or partially deductible aspects of the same vehicle. Private use portion. The 15% K108 of fuel cost plus K12 GST is not deductible. It is a private expense. Traffic fines. If David gets a speeding ticket while on business, the fine is not deductible. Initial purchase of the vehicle. The K80,000 cost of the ute is a capital expense. It is not deducted in one go. Instead, it may be depreciated claimed over several years under the capital allowances rules at a prescribed rate, e.g. for a commercial vehicle, maybe 26% per year on the declining balance. Alternatively, if the cost is below the instant asset write-off threshold which the IRC sometimes introduces as a temporary measure, it might be deductible in full in the year of purchase. Key PNG-specific considerations and documentation. For an expense to be accepted as a write-off, documentation is paramount. 1. Valid tax invoice mandatory for GST claims. The diesel receipt must show supplier's name, IRC GST registration number, invoice number and date, description, quantity, and price of goods. Total amount payable and the GST amount separately. 6. Business purpose record. David's logbook is crucial to substantiate the 85% business use claim. For other expenses, note the business purpose on the invoice, e.g. on a lunch receipt. Meeting with coffee buyer from Leh. 7. Common allowable deductions in PNG. Rent for business premises market stall lease. Salaries and wages paid to casual workers loading unloading. Electricity and phone costs for the business apportioned if private use. Bank charges on the business account. Accounting and legal fees for business purposes. Marketing costs, e.g. flyers, small newspaper ads. Cost of goods sold COGS. The largest expense for Kumu Market supplies. The amount paid to farmers for the vegetables he resells. 15. Common non-deductible expenses in PNG. Personal drawings by the owner. Life insurance premiums for the owner. Fines and penalties, e.g. IRC late payment penalties. Entertainment expenses are heavily restricted and often not deductible unless very specifically for staff. Political donations. Annual tax filing process simplified. 1. David keeps all receipts, invoices, bank statements, and his logbook for the year. 2. Here his accountant prepares financial statements profit and loss, showing all income and deductible expenses. 3. From the net profit, his personal taxable income is calculated as a sole trader, business profit is his personal income. 4. He files an annual income tax return Form 4 with the IRC, declaring his business income and deductions. Tax is calculated using PNG's individual marginal tax rates. 5. Separately, he lodges his GST returns Form 3B quarterly, claiming ITCs on expenses like the GST portion of his fuel. Final advice for PNG small businesses. Open a separate business bank account. This is the single best practice to simplify recordkeeping. Keep every receipt. No receipt equals no deduction in an audit. Understand the basics of GST. Know when to register and how to claim ITCs. Consult a local PNG accountant. Tax laws change, e.g. potential changes to depreciation rules, tax rates. A local accountant is invaluable for ensuring compliance and maximizing legitimate deductions. Disclaimer. This is a simplified example for educational purposes. PNG tax law is complex. Always consult with a qualified accountant or the IRC for advice specific to your business. This response is AI generated, for reference only.